Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at potential hotspots in the markets. Today is Wednesday, June 30th. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice, as well as Dan Cook, also from Nadex. Before we take a look at some potential hotspots, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And lastly, this is an educational session. Please do not construe anything any of us say as a buy or sell recommendation. So where are we going to start today? Today we are going to start with oil. Oil is definitely a volatile spot in the markets. We had an inventory report yesterday, and we've got another one today, 10:30 this morning. Yesterday was the industry report. Today is the government report. So we will find out where our oil is definitely very much a supply and demand driven product. We know demand is up. We've got to track what is going on with supply. We're also going to take a look at some technical levels on where we are with oil now that we punched up above 74 and looks like we want to start to roll over. With that, you know what? I'm going to go ahead and, Brian, I'm going to flip it over to you. I don't know if you want to share your, oh, you do have your screen shared. That's on me. I've got too many windows open.
Dan's messing it all up. He's like, there's 4, it's just too many. Yeah, so there we go.
Yeah, there
all
we
right,
go.
So yesterday, as you guys know, the API number is an industry-specific number, not considered the most reliable, but we've seen this trend for the last couple of weeks where the actual number comes in really twice as bad as the forecast as far as the down draw goes. And again, this is the 3rd or 4th week now in a row we've had a minus 8 million barrels of reduction in supply or inventory. So again, is this the actual number? Not really. Again, we know that this is the industry specific. They say, hey, give us your accurate totals, but there's no recourse if they fudge the numbers a little bit. That's why the EIA number today is a little bit more important. Today's EIA number is supposed to be, again, 4.2 million. And you can see, for the most part, this is actually followed pretty closely. And you can see it's been, June 16th, it was almost 4 times higher. Last week was over double. And again, the market is looking at this and saying, hey, listen, maybe that number is not truthful, but it's at least been in the right direction by a significant amount. And again, that's a 10:30 release today. Looking at oil right now, you can see we were sitting right here yesterday, right here at the 9 o'clock window. We talked about having a bit of a zone where we had some basing and a nice drop. You guys, if you remember what the purple is, Todd gave it away, but that was a knockout bracket. And you can see it had about 20 cents worth of risk, and you can see it drove about $1 down. And this is where the end of the orange is when it's 2:30, when the oil market technically is, the contract kind of expired. Knockouts don't, but all your binders and things like that would expire early. But again, risking 20 cents to make $1, nice little return there. Now, this morning, it has finally gotten stopped out, and that's one of those things. You don't have to hold knockouts till expiration. This is one of those examples. And again, even if you did hold it and you forgot, it's kind of like, oh, we're starting the new session. Oh, maybe I should get out before they kind of take over. And if you didn't, again, it cost you on that one. So that one is now officially out. Now, yesterday, we talked about how we had a big scenario. Remember, whenever we see the little, we expect big, but when we see big, we expect mirror. And that's more or less what it did. It continued to drive up, and it went up for a half hour longer before pulling back. And these two are almost exactly the same. We had the same bit of movement today. Now, the EPI report kind of came out in this area and pulled down, which a lot of people say, well, why would it go down if the inventory is missing? Well, it makes perfect sense. If you want to buy something, do you want to buy it when it's expensive, or do you want to buy it when it's cheap? So the market drove it down. The Europeans came in and said, ha, let's go. And it went up. And now this has been a pretty big runner for today. Remember, when we have big European session oil moves, it kind of messes with the U.S. session for a bit. And $1.30 is typically where we see a miss in the oil inventory. It's between typically like $1.20 and $1.60 is the movement that we have on oil report misses. With it pushing higher, when we look to the left, we already know we had one level, and it kind of came up and it stabilized in here. We got some sellers here, some sellers here, some sellers here, and a much larger time frame here. If this is where the top is put in, again, this could be another one of those scenarios where we kind of drive back into the zone and pull back down lower. And you may say, well, how would that happen? We know inventory is going to be bad. Well, yeah. I mean, think about it. If it drove up, and if you need to make some money, right? If you're long here, we know what the rule is: buy low, sell high. But if oil is going to be so bad, who's dumb enough to buy this, right? Well, it's going to be, again, for lack of a better word, the retail traders that don't know what API is that come in today, and then they're going to see a number here that is super green. They're going to start buying it. Well, when they buy it, they're taking all these people out for profit taking, which could lead us again to a bit of a reversal down. Again, we are at a round number. We're sitting there right at 74 where that knockout was. So one of the things that I told you yesterday was it would be a good idea to check to see what new contracts would print. Because remember, call spreads are, or I'm sorry, knockouts are weekly, but new contracts are printed every single day at 6 p.m. when Nadex reopens after kind of the reset. You got to look to see where the new binaries, the new call spreads and everything come in, and there just happens to be something up in that area. I'm not going to tell you what it is. Todd can ruin that surprise for you. Okay, Todd's going to ruin it for you. I was going to say, you guys need to do homework. You need to get on your own platform and do it, because if you don't have a demo, sign up for one so you can go look at it yourself. And
you can play around. I do want to share quickly. One, you could take a look in the call spreads. I am in the call spreads. You could take a look. Here we are in the 8 a.m. to 2:30 ones, where we do have a call spread where the ceiling is right here at the 74. So we are right at the ceiling. Now remember, touches the ceiling, you're not knocked out of the trade. But if you were looking for a rollover, there is a little bit of a premium, right? There is a little bit of a premium for that optionality, but it's a way for you to take a short position, potentially looking for it to profit if it were going to go lower, if that's what you thought it were going to do, if it were going to roll off of these levels. But you don't have that hard knockout. We could, and I'm going to do it just for education purposes. Let's jump over to the commodities on the knockouts. We'll look over at crude oil. I'm going to click on any one of these because it doesn't matter, and we can actually take a look. Is there anything in here where with an interesting ceiling? If you were looking for a rollover, there is a knockout up here, but the ceiling is all the way up at 75. So there is some risk in it. There's going to be risk in any trade, but you've got to decide how do you want to play this. No premium at all in the knockout. The knockout is a delta 1. Notice you're trading right where oil is, right here at 74. That's the price you're trading on the knockout. On the call spread, a little bit of a premium baked in. So, Brian, I'm going to flip it back to you. Oil definitely in play today. We had the API numbers yesterday, and then we've got the EIA numbers today, 10:30 Eastern. In fact, I'm going to grab the economic calendar.
Yeah, and remember, there's multiple ways to play it. If you don't like it now, because remember, whenever we have a session open, there's always going to be an increased level of risk. The reason why is because new traders are coming online. Now, technically, the futures market, they're already out there trading, but the overall retail trader would step in. So 9:30 is a big time when you'll see movement. Yeah, there's a cost associated with anything that you're doing, whether it be premium or the spread or anything that we need to cover. Again, it may be, you may want to take it now if you don't want to kind of risk having this trade run away from us. You may want to wait until it gets a little bit higher. Again, if it gets a little bit farther out of the money, the risk getting into that call spread will be cheaper, or maybe even take it down and look at one of the 2-hour binaries. Having a 10:30 release is great because a 2-hour binary would be from 8 to 12. A little bit of time, basically 25% of that time value will be eaten up in that time frame. And again, you could play a quick retrace back to the downside. That's one of the nice advantages of having it be a 10:30 release and not like a 9 or a 10 o'clock. As well as 10:30 is the typical reversal time. So, you could take the risk and maybe maybe miss out on this one to get into it for a little bit cheaper. But remember, if you get too greedy, tends to be where it costs you. So again, everybody's individual trading risk level is different, and you guys can do it from there. Another thing I think we need to really highlight today, and again, one of the things I don't know if we'll have time today, but we talked about the CAD GDP. That number was not as bad as what we thought. But we do have Chicago PMI coming in later on today as well. Now, there's been some very interesting headlines, and I want to bring this out because the indices have kind of pulled back a little bit. And here's why, based off this non-farm employment change number. Now, I would say this probably doesn't have many, many implications today, but remember, we have NFP, the real big one, on Friday. So seeing this number now, although they're not the same, it's a little bit different. It still kind of gives us an idea of what we could potentially expect, as well as how the forecast will change and how the market needs to react to it. Now, today's a split number. Why? Because they had to adjust it. It was not as good as what they thought it was before. Originally, it was 978,000. Yeah, it came in like 100,000 worse. So this is great when you're seeing a big push here, but they look at this and they're like, there was kind of that adjustment. and it's kind of been a trend where they're making adjustments. So the initial response from the market was actually coming back down again. This is on a 30-minute. You can see the candles over here. You can see the initial response was basically down, and now it's stabilized and actually started to take back up again. But it is something that they can gravitate towards. That, yeah, while it was good, we had to adjust it. It wasn't quite as good as it was before. The reason why I bring it up is it is kind of set up right now more for kind of a retrace long again for the open. But there's been some comments this morning that have been very, very interesting. We've highlighted this Kashkari one where he keeps saying that he's got T-shirts now you can buy that says deep hole, right? He keeps talking about how bad the economy is still, and we don't want to prematurely cut off the recovery, and he keeps talking about it. But then Bostic, the Atlanta Fed chief, he's talking about how the recovery from the pandemic has been amazing. We've actually fully recovered, but mandate doesn't cover the GDP, but employment and inflation are there. So this is yet another one of the Fed presidents in Atlanta. Bostic is a big one, talking about how we have recovered. So again, it's one of those things. I wish I could be a fly on the wall in their meetings, because multiple different Fed presidents now have said, we've recovered. I don't know why they keep talking about we need to do this. I mean, think about it. They're talking about this robust recovery. We're not changing rates for years, but there's people that are talking about we're already recovered. The economy's coming back. We can't find employees to work. The unemployment rate, and again, this is why this is so important. Friday, the expectation is that it's going to drop down to 5.6, but yet supposedly we're in a deep hole right now. So I've drawn some things on some of our charts, and we've talked about what that recovery looks like. I really think that's something that we need to watch out for when we get buying opportunities. I think we need to watch that. And if price continues to rise, I think it sets us up for a disappointing non-farm number on Friday. But if we continue to stay low and we push down, again, not on a 5-minute, but on a 15 or 30, if we push down in some of these lower levels, that may be the springboard for us to get out. Because remember, when the market is expected to rise, it will typically drop first, so the buyers can get things in at a cheaper price. Okay, so what you can do with this is, again, you can look at those call spreads to see if there's any good ceiling or any good floors. You can look at knockouts, but make sure that the knockouts, again, they can't sustain any whipsaw. You got to make sure we get into good positions. And again, it's kind of the same thing. All three of them look more or less the same, where they had a pullback and now they're retracing a little bit. None of them are ideal right now for a setup for me, but I would say that you got to looking at this to potentially go long.
Yeah, I was going to say, and don't forget, while we're talking knockouts and call spreads, don't forget the bread and butter here. There's always the binary options. Right. So all defined risk, defined reward, and definitely different ways to play that with the binary options. And I will say we are coming into the end of what's expected to be a quiet week as people head into, we're saying the pandemic is over, economic recovery has happened, although we know the pandemic isn't over in Australia. And as people are heading out, we're hearing more and more stories of outbreaks in spots where people aren't vaccinated, and then they think it's all over and it's not. But on a quiet week.
And that's a great point that you bring out. I was going to say, a great point that you're bringing out. Again, the pandemic is not gone, but at this point, the question is, how much will it really affect? Is New York City going to lock itself down again? And the answer at this point, I think, is equivalently no. It's not going to.
Right.
I think we're beyond that. It's kind of like, if you're vaccinated, great. If you didn't, it's your risk. You need to take that risk and responsibility. At this point, they've shown that we can keep open. I don't think we're at a stage where it closes, even with the Delta variant. So just be cautious, again, trying to play this COVID angle anymore, because, the economy it's rolling on all cylinders. There's not much more they can do at this point. We stomached through it during the worst. Even if it comes back, it's not going to come back at the same amount. So I would be, again, because of the amount of vaccines that are out. One thing too that I do want to add into this,
because we're also now not threatening to overrun the hospitals. A lot of, that was the whole. We now have the resources where if there were an outbreak and a certain percentage of the population were to get sick, and we've got the ability to either take care of them or whatever, or worse.
And I would say watch too some of the indices today, particularly the NQ. The reason why is Tesla is considered down right now. Apple's up pretty decently, but Tesla typically opens and then pops. It opens and pops. So again, that will be one of those driving forces today. I think that will be probably one of the ones to watch out for. And then again, last but not least, again, we got to get rolling. It's 9 o'clock. Don't forget, tomorrow we have the OPEC Plus meeting. So again, remember, some of oil today will also position itself for tomorrow. Remember, OPEC is talking about increasing or basically decreasing the supply cuts that they were able to do. So any type of a pop higher, remember there's probably big business out there trying to figure out how the heck we can short this number, just in preparation for, again, maybe Iran bringing more supply on, but also OPEC plus. And again, they're chomping at the bit seeing oil at $74 because they produce more. Even if the price drops back down again, they're making substantially more money, and that's what they got to be
Right.
thinking at this point. That recovery is here. Bostic just said it.
Yeah. So if there's a takeaway from today, oil is definitely a hot spot this week with the inventory reports, with OPEC, with the economic recovery. Oil is definitely something to be taking a look at, along with the equity indices. Again, with a quiet week and a slow week, small volume can actually create a bit of volatility. So you might see some price moves when there's not as many eyeballs as we go into the end of the week as people start to get away for the Independence Day holiday. Any parting shots, Brian? You got anything else you want to toss out there?
No, I would just say make sure that with a 10:30 release, make sure at 10 o'clock you're in there and you know exactly where the 2-hour binary positions are, as well as the floors and ceilings of both call spreads and knockouts.
Yeah, so be ready for that oil inventory report. Any questions for Nadex? Please email us customerservice@nadex.com. Brian, also very accessible. You can email him if you got any questions. I know he loves interacting with you. support@keeptradingsimple.com. With that, I think we've kind of summarized everything we've covered today. Oil definitely a hot spot. Take a look at those equity, U.S. equities, both the S&P and the NASDAQ, and be aware of where those knockout and call spread levels are, but also your different choices in binary options. Those shorter term binary options get really interesting, particularly around news announcements where you've got tighter spreads between the strike prices, and you could end up seeing some great opportunity if there is
don't
some
forget,
volatility.
if you don't see them, hit the refresh button on the bottom. I got an email about that, about how I don't have any binaries, and I said hit the refresh button, and they popped up. They don't automatically populate when they print, so make sure you guys are hitting the refresh at the top of that hour.
And you'll notice if one of them says expired, that's also a clue to hit refresh. That means something's expired and we printed something else. So if you see expired on there, hit refresh because the new ones will pop up. With that, we will catch you tomorrow morning. We will all be back tomorrow as well as Friday. A reminder that next week we won't be doing the sessions as we're going to take a little breather so that we can recharge our batteries. But we will catch you tomorrow morning. Good luck in the markets, everyone. Thanks. We'll catch you.